Welcome to TradeTheMBI.com. This is John's report is for the 30th, and well, continue to move higher, and that's that magenta over yellow here on the MBI, and literally we've still seen no short activity. We do begin to see the beginnings of a DOC spread, minor. Usually the most effective ones are where you get the giant move, propelling past, like last time we had the crossover. Was also very minor, didn't produce much of a thing, but when you get a more dramatic one, that really accelerates along with having your DOC under the negative 13.5, you get a much more bigger swing. Here, we don't have those cases. Now, we could see a continuation drop of short-term buyers here, and that would be enough, but we're not. The excitement and the exuberance of nothing happening is always good for the market. Political gridlock is always been a market boost, and particularly an election year. They know that nothing's going to get done, so that's usually a positive. And then for what really happened was the Treasury announced that they're going to need to borrow less money to meet their obligations, which we all know is going to be funny math until that rooster comes home and they'll revise it back up. But in the interim, it makes everything look good. So from an NQ standpoint, it had a little bit more weakness, but again, zero short activity there. And so, we're just getting a balancing out. And the reality is this short rise of the DOC, if it gets up towards that 7.5, not going to last very long. So any mitigation is going to be minor at this particular stage, barring some world events, which, of course, at this particular stage, everyone's kind of ignoring all of the things that are happening Middle East. But as soon as conflict actually breaks out and/or there's some kind of change, well, that's going to be certainly more dramatic and have to be prepared for far more dramatic swings. So I think that it sets the table for that kind of added volatility. Treasuries bouncing back up here. We created a lot of popularity in there. The reality is this yield is still a little outside of where rates really are, so not beneficial to be in treasuries at this particular stage, which is why money's got to go into the market, and it's exactly the correlation. We had a nice sell-off, even though inventories are dropping to significant levels. Still a fade-off, but they're going to do what they can to try and hold this down, because this becomes really critical. If it starts to ebb up out of control again, you're going to get back into that same rate inflationary pressures. And even this rise, if it's sustained for a couple of weeks, that is definitely going to continue to impact the rate of inflation. Not going to be any change in what's already gone up. It's just how much faster it will go up. So people forget that sometimes when they look at these numbers. Oh, the rate of inflation. Well, yeah, but the inflation that was there is already done and happened. You're not going to deflate at all in any of those scenarios unless you had a major drop in oil prices to about half where they're at. Of course, some people realize that this is a very major negative, and the ECB isn't changing their policy as far as rates and that, which is also very negative for them, because how do you attract more people into a euro with not for better rates, and the fact that oil rising, like we said, is going to have a proportional reality to euro pricing. From a gold standpoint, it's a net positive, because the reality is everybody knows that that's just funny math when it comes to it, and no real change in how much devaluation is taking place, and that's getting incorporated in gold much more dramatically in crypto space after the brief fill of positive extremes, coming back strong from that standpoint, and nowhere to go but up if the inflation continues. So that's then of course you have the halving coming up, which will be an interesting one. Make it harder for miners to actually make anything on that, but theoretically, the number of nodes should still keep increasing, and if it doesn't, then that'll be an interesting one. From an ETH standpoint, far more muted than Bitcoin's action, and these are just the relative realities of following the readings for each of these. There's slight variations in their momentum. A lot of it's news related. From 50K, you could see that we just hung around that 50% mark, stayed positive on the MBI magenta over yellow, and made it very easy to continue that move. Even though it did have that DOC spread there, moved back down to cyan under red just before the breakout, and that really propelled it cleanly all the way through. So fairly easy action from that standpoint, and net positive. We look at it intraday, everything was pretty calm, and then there was the announcement that just shot it up towards the end of the day, and that's exactly where it stayed. We're getting a little teeny fade back into some of that, but there's a lot more positive extremes on that move, um, particularly all the way down to the 49.30 range. So keep that one in mind as looking forward. All in all, plugging away. You can get ready for indicators for February to be coming out. Have a good one. Anything relevant, I'll put it on the Skype chat. Trade well.